Hi guys, it's me, Teresa Perrin, and I'm going to discuss AVCT. At the very end, I'm going to go over the chart. I already filmed that part. But first, guys, there's a couple things that I really need to discuss with you guys, and I'm very concerned, to be perfectly honest, with some of the comments that I'm seeing and remarks that people are making. And I'm even getting comments under other videos talking about my need to discuss AVCT and why it has a 10% price drop. Guys, if you can't handle the truth, then I highly recommend you stop watching this video now. If you want to hear the truth and hear what's going on in the market in AVCT and a real reality check that I think you guys need to hear for yourselves, then please keep listening, because I have some stuff to tell you and some of you aren't going to like it. But the reality is, guys, nothing I say is financial advice. You always need to do your own DD before we get started. But this market is a bear market right now. It is bloody red. It's absolutely horrible. And guys, I don't see it getting better anytime soon. I'm talking about the market as a whole. We may continue to have, these little bull rallies in between, but I don't think we found a bottom yet. I don't think we're anywhere near a bottom, to be very honest with you. And it's painful. It's very painful. Everybody's long-term portfolios that I know are getting destroyed, and it's sickening. But on a positive note, and I will save this for another video, now is the time when true wealth can be built, guys. Now is the time where people who don't run in fear and start dollar cost averaging in, not throwing all your money in on one day, really will make money in a long-term perspective, okay? And I say long-term because we need to come out of the bear rally, but this is when prices are disgustingly cheap. And if you start averaging in and knowing that it can dip more, but being okay with that because you're looking at the long-term, you can do very well. Okay, guys, I had to take a little break from my own rant, but I guess my points that I'm trying to make are, this is a buyout play, and you should have known that going into it. We're in a bear market, so you can't expect miracles. In order to move the stock upward, we either need to technically bounce off of support, and I'm going to talk about support and resistance in a few minutes, or guys, we need a catalyst, such as a bullish filing, insider buying, or news of the buyout. Now, guys, to be perfectly honest with you, it is important to know that buyouts take time. So if you came into this expecting a miracle, or in the next week to suddenly have your share price go from, let's use today's closing price after hours, which is around $2.20 as my example. So if you expected your share price to go from $2.20 to doubling to $4.40 overnight, guys, I don't know how to help you there, because that's not how buyouts work. And that's why I hate dates. Buyouts take time, and you just have to be patient, or this sadly is not the play for you. But guys, another concern of mine is the fact that either people do not have conviction, and the reason being for that, my guess would be, they either read too much stuff from FUDs on social media, and they have no hope in this play, or I don't know, or they just think that it's going to happen miraculously. I'm very confused, because if you have conviction in this play, you don't really care what the price is right now. Like me, I could care less, to be perfectly honest. I don't care what it does between now and the next couple months. I expect that it's going to be somewhere around the same level, if not slightly lower or slightly higher, until we get some big news, guys. I do think it's going to fill that gap. I do think that there's going to be runs in both directions in between. And, when it dips down, there's your opportunity to buy more, dollar cost average, to do what you want to do if that's what you choose to do. Or guys, take it. If you don't want to hold and wait for this, then you take advantage and you just wait for the next run and you sell. That's all that you can do. But guys, I can't keep every single day making a video when there's not a lot to talk about, and I can't keep playing into people's fears, but I do want to address my concerns because either people over leveraged themselves, they didn't do their DD, or they had unrealistic expectations. And guys, you can't blame anybody but yourself if you were missing one of these things, because I think everybody made it perfectly clear. And I was honest with you with the reverse split that the price was going to drop before it comes back up. Now, unfortunately, we reverted back to this bear market. That was just a bull market rally, and it didn't last very long, did it? It was quick, and that was it. And unfortunately, for us, that means we may need to wait a little bit longer. But guys, we are at a support. I'm going to show you the chart. I'm going to show you what's going on. And let me just give you real quick a breakdown, because support, guys, we have at $1.87, which if it goes under that, expect it to go a lot lower. And then you need to really make a decision if you want to hold or not. Because if it goes below $1.87, guys, in that case, it's going to be a falling knife. 211, we have support, which I think we've been building. Every time we hit that 211, we've been building up and building up. I think we created a support too at 203 where we bounced from completing that gap fill, guys. So that's a small support, but the bigger support is 211. And guys, we also have that $2 psychological support, because a lot of people will exit a play if it dips below that $2 level. So 187 is your big, oh, we're screwed if it goes below that, okay? Then let's say $2, 203, 211 is where we really have accumulation. When it dips down to that 211, people are buying. As you can see what it did in after hours, right? And it ended up closing at 220, but it did dip down to that buy zone. And we also have 219, which we happen to get over, but accumulation happens there as well. It seems that 211 is a stronger level of accumulation than that 219, but both of them are areas where we accumulate. So 219 is now acting as support, but guys, I don't think it's a very strong support, especially since that move happened in after hours. But it could, act as support or resistance in the future. So keep that level in mind. And then we have for resistance 282 and 332. Okay, guys, if we can get above 332 and close above that, then we should be on our way to filling that gap, which I do think is coming in the near future. And guys, on Friday, the price fell 10 or 11% on the day, right? It was a pretty crappy day. But again, this is trading at $2. So 10% of that, guys, is not a lot of money. It's 20 cents, which the stock can move. And it does move very rapidly up and down. 20 cents is not really that big of a deal, in my opinion, but to others it may be scary just seeing that number. I get it. But again, this is a very high risk play, and you need to know that. This is not, investing in Apple. And even Apple right now is falling, guys. So, I mean, really? If you think miracles are going to happen for these smaller companies when it's risk off in this marketplace, I'm sorry to say it's not. And, you need to be aware of that. But guys, the volume actually was increasing on falling prices, which is a divergence on Friday. And it happened on Thursday too. And usually when you see that kind of a divergence with increased volume and decreased prices, the next thing that comes is a move to the upside. And if you believe in Wyckoff, we haven't gotten the spring yet, and that spring should be coming. Okay, guys? That's the next step. That's as much as I can break it down for you. And if you want an even bigger statistic, I can give you the AI price target. Let me see. I think I wrote it down because it was between $1.78 and $6 and something cents was what it was expected to be over the next 90 days or 6 months. I forget exactly. But guys, that's a lot more upside than it is to downside, right? So my point being, you just have to be patient with this or know your risk versus reward. And guys, if you can't handle it and can't wait, then you probably shouldn't have been in this play because you knew what it was. I told you guys all along that it was going to drop after the reverse split, but to be patient because then it will rise. And there are people that understood what I said and have made a lot of money on this play by following that. They sold out, they bought it back. And that's not for everybody, guys. Not everybody's going to sit there and watch it, sell it, buy it back, sell it, and plus you run a risk too when you do that. Not that I'm saying you should or shouldn't do that, but you also run a risk of, let me tell you, when that buyout news comes in, they're going to halt this stock, and it's going to be a halt, news pending. You're not going to have a chance to buy anymore. You're not going to have a chance to do anything. If this gets bought out, you will get that halt, and it will open up pretty darn close to what that price is. That's just what happens in these plays. So know that as well. If you're selling out and you're hoping to buy it back lower or whatever the case may be, just know that that's fine, but know that you take on that risk too of if that news comes in, that is exactly what is going to happen. So I just want you to be mindful of that. All right, now let me show you some more as far as where we stand. Technical. All right, guys, like I said, today was a very ugly, bloody day. And as you can see, we are forming basically a triangle, right? Or a pennant. Straight down, but we're coming close to where we hit that 211, and that seems to be our resistance, guys, where we spring back to the upside. Now we want to see eventually a good bounce there that gives us a significant move. Will we get that Monday? I don't know, guys. My guess is as good as yours. All I can tell you is technically what I see, what the supports are, what the resistance are. If you need to, go back and rewind that last section and listen and write them down. All right, so after hours though, guys, I noticed at 7:59, somebody purchased 2,000 shares, literally 2 seconds before the end. 2,000 shares at $2.20. So guys, is there potential for this to move up on Monday? Somebody thinks there is. And that's because of what technically we're seeing. And like I said, we pushed through that 219 resistance. And look, in the after hours, we didn't even hit that in the last 5 minutes. We went from 218 to 220, 221, 220 with that 2,000 shares. Okay. So somebody likes what they saw. And there was several more than 1,000 share purchases during that time frame. All right, guys, right now it's Fintel showing us that we have a 152.45% short interest with 1.35 days to cover. Now, I do want to give you a heads up on this short interest. Whatever Hudson Bay sold into the market, I am positive that those shares are not being accounted for in this number. So when you see this suddenly drop one day, it's going to be because our volume increased to show us Hudson Bays. So I don't think this is completely accurate. And I just started thinking about this and wanted to be open and upfront with you guys before we see a drop that I think that it's still very high, guys, but it's probably close to half this number in reality. I could be wrong, but I'm assuming that they have not added it in. So when you see this number drop off, I just don't want people to go, oh my God. But it is what it is. And I mean, we went from 10%, guys, up to 152.45%, which is more than likely somewhere around 75%. Okay. All right. Now, there's still 500,000 shares available for them to borrow. And they're showing currently that the cost to borrow is at 20.67%. And again, guys, this price is being very much controlled. You can see that because this short volume ratio is the amount of short volume that is being done in the dark pool, right? And we're at 51.42%. That is how they control the price. And once again, for whatever it's worth, we had those 12,258,000 shares that were due. Guys, I told you, yes, we have these FTDs, but look at the next day. It looks like they fell down and then they're building up again, then they fall back down. So somehow they're finding these shares to cover. Look at how they're doing it. And this is to be mindful. And I'm going to repeat this until you guys get it drilled into your head. 12,258,827. They failed to deliver at 46 cents. So what do? They drop the price. Market makers have the control, guys. They drop the price, get people to sell out of fear, and they buy them back cheaper. They screw those people who get scared out of their money. They buy them back cheaper. They make money. Look at that. They sold it to you for 46 cents. They bought it back at 22. Guys, this is how they play retail. It's crazy, but it's important for you to see this. And I'm sure when we get these numbers for September, the same thing happened. The price went up, they built up again, and what did they do? They dropped the price down, and all those people that couldn't hold through that, they screwed. They bought it back cheaper, and they sold it to you higher. That is why, guys, you buy low and sell high. Right now, what I see is this as an opportunity. As the price falls and hits those resistant levels, if you have money to invest more and you believe in this play, that's the time that you do it. When it's going up, which sadly most of retail, guess what? They're buying as they see that price going. That is not the time to be buying. Those people that bought at 45 and 50 cents, those are probably the ones making these comments because, guys, they're scared, right? They bought high. Which I don't know how to help you. I really don't. When you see a play that's run, 100%, because it was at 20 cents before it made that move, or 25 cents, something runs 100%, is that the time to jump into it, guys? No. There'll always be other plays. The time to jump into it is before you get that run. Or, when it's still showing strong potential, but it wasn't at 50 cents. You bought that at the worst possible time if that's you. And the only thing you can do now, if that is you, is to average down if you have the money to do so. Or else it's a waiting game, guys. And, for those of you that bought the top, it's a hard lesson to learn. We've all learned it at one time or another. Even experienced traders sometimes buy into the FOMO, right? Guys, when something's running like that, and if you want to be in on it, you need to wait for that pullback. And it sure did get it because it dropped below 20 cents after that first run. Did it again after the second run. So now when the price is trading right now at that when it hits that 211 to 219, that's your buying time, guys. Best advice I can give you. And guys, never be afraid to take profits. In a play like this, yes, it's a buyout. It's a little bit of a different scenario. If you're in it for that reason, like I am, then you're probably not going to be taking profits along the way, but you can. But guys, just know that there's risk. So if you're willing to risk part of your portfolio and trade with it, I do that a lot. I split my position into that I'm willing to hold and that I'm willing to trade so that I can get more shares. There's nothing wrong with doing that either. Or guys, if you really don't care and you're happy, like a lot of people are with that 5% gain when it makes those runs, that's how you build your portfolio. Just capitalizing on gains. And I'm not saying you have to do that with this stock, but in general, this is a different situation, provided, of course, that we do get that buyout, guys. So anyways, let me show you the chart, and I'm sorry I filmed the chart part early, so some of it might be a little bit a repeat with my lecture. Ignore that part because there's some good stuff in there. All right, guys. Okay, guys, so we are looking at the daily chart for the past year, and as you can see, for the entire year, AVCT has been trading under the 200 SMA. Now, back in the beginning of September, we had a bullish change of pace where the 13 and the 20 went and crossed above the 48 SMA. So if you're looking, it's very hard to see because they're all kind of smushed together right now. But the green is my 13 SMA, the blue is my 20, the purple is my 48, and the red line up at the top, this here, is my 200-day moving average. So currently, what happened was it went up, it crossed above the purple, it dipped back down, came back up, and currently we are still trading above, guys. So as long as we maintain that, this is still technically bullish. However, you want to see all of these averages start to curl up and eventually cross above this 200 SMA. That is what we need for this to really start making some massive moves, because a lot of traders are not going to touch this below the 200 SMA. And you need that volume to come in to boost the price up, right? So that's what we're facing right here. Now, currently, as you're well aware, this market is in a downtrend. And guys, that's a problem because this is following that trend right now. And I have a lot of people messaging me, what happened? How come we haven't moved up yet? Well, guys, we haven't moved up yet because we don't have a catalyst. However, what we do have here is doji, or pretty darn close to a doji. It has a tip at the bottom of this. Another doji. This is a lot of indecision, guys. Generally, when you get these dojis, like I like this one here on 10-3. I'm looking at, let me see if I do a 10-day. Just going to try to give us a little bit more, but a little bit closer. You can see these lines better here if I do the daily chart on the 10-day. As you can see, when we gap down from that reverse split, which I told you was going to happen, guys, right? We closed below and we continued to move down. And look at dojis. We got a doji. This was a beautiful doji here, 10-3. I'm actually very surprised there we didn't get a move up close to a doji here, but that's kind of like a hammerhead almost. This one, same. It has just a small tip, guys. Another doji. Both of them have small tips. You know, we could continue to trade sideways until volume comes in. And essentially, guys, this is consolidation. I know that, you know, people are whining about, yeah, it's a 10% drop, or it's this or it's that. Guys, the reason that is because it's trading so cheap at $2.40. Look at what the whole market is doing as a whole. You know, the S&P 500 was down over 2%. The NASDAQ was down 3.8%. I'm sorry, the Dow was down 2.8%, I think, 2 point something percent. But so was the Dow. I mean, so was the S&P 500. The NASDAQ was down 3.8. That was the worst of them all. Every single index is red. So guys, you can't expect miracles. This market is very, very bad. It's a bear market. Everything is falling. Even top name companies. I mean, seriously, take a look at things like PayPal, Square, you know, these big companies that are just getting crushed. Look at Novavax. It went from $300, guys. It's trading at $17. Imagine being that person that bought that at $300. Oh my God, what a nightmare. I mean, seriously, there are some very, very beat up stocks, and we are not alone. But guys, I'm going to remind you again, what kind of trade is this? What did you get into this expecting? Because I'm very confused by a lot of the comments that I'm getting. I don't know what you heard from other people, but I've been saying from the beginning, this is a buyout play. And guys, this is why I said I don't like dates. First thing I told you was nothing's going to happen until after October 6th because Hudson Bay needs to get cleaned up. That was the date of the filing. I just checked the filings. No filings have been removed, right? So, I mean, have been added. So they haven't even notified shareholders yet that what Hudson Bay did with those warrants. We don't see any updates. And I'm telling you, nobody's going to update their, you know, share count until a filing gets put in. So we're not seeing that being affected, guys. But they're going to have to do something soon because right now they're not in compliance with the NASDAQ. So they're going to have to file something and show us how many shares they have. And we better hope to God that there's enough shares in there that they don't have to do a filing to do an offering because they need to get that market cap above 35,000, right? And yes, they have until January, I believe, to do it. I have to double check that for sure because there's a lot of companies I've been looking at with similar issues. We are not alone. This is a big problem in the market right now. And I hate to tell you guys, it's going to get worse. It really is. But the thing with a buyout is, yeah, we can all sell, but and wait and think it might drop more, which it could before it goes up. It could continue to consolidate in between this $2 and $3 range for Lord knows how long. I mean, look at something like pets. It can happen, guys. Unfortunately, this bear market is not helping us. However, I am going to show you what is helping us in the rest of this video. But I did want to show you this, and I also want to show you one other thing. All right, guys, this is our 4-hour chart. And here we crossed the 13, this green line, crossed below the 48, which is bearish. We need this to curve back up to cross back above. And then we should see a move to the upside, obviously, in order to get that. And as you can see, though, guys, yeah, it went up, came back down, went up, came back down. All in all, really what we're looking at is like big fat consolidation for the main part. You know, a little bit jumps. Yeah, that's a significant difference, but not if you compare to where this was at the beginning of the year. I mean, go back over just to December and, you know, split value, it was trading at $46. You know, crazy, guys. It's really gone down, and eventually it is going to come back up. But I'm telling you right now, every tech stock that I own that's like a small company is getting beat up bad, just very, very bad. Support, guys, is at 187. So if we dip down further, we do have support at 187. Now, the thing that I see that's bullish is in the after hours. Look at this. We got a move back to $2.20. And the 13, which is my green, crossed above my purple, the 48. Now, here's what I would expect at market open. Potentially it to slightly dip down in this consolidation range between this 210 and 220, maybe go up a little bit before coming back down. But I expect this to cross diagonally down and then up to the upside if it's going to go up, guys. Again, I can only tell you what the chart shows me. The chart shows me consolidation. I don't know. I know that we have the gap fill up to make, and I think that it will be coming in the near future. But guys, we don't have a catalyst. We don't have anything showing us. So unless people buy because it's insiders that know something, which is illegal. So, you know, I don't know what to say, or unless we get some big firm that's expecting something, big money to come in and buy it, then expect to be trading in this range unless the market makes a move higher. Now, I can tell you what some of the analysts are saying about this week. They expect a further decline on Monday, followed by a move up Tuesday, Wednesday, Thursday. Friday, we have some other Fed stuff going on. So who knows what's going to happen? That's an indecisive based on whatever happens on Friday. But that's what big money is counting on for this week from what I've heard from analysts so far. So guys, all I'm saying is stay patient. I might put this at the end of the video and start with something else. So never mind what I said about, I'm going to discuss that because I think I'm going to put this at the very end. But anyways, guys, thank you so much for watching and have a great rest of your weekend.